How are you? Good afternoon, Stephen. Good afternoon, Jerry. Good afternoon, BTTFT family. Those of you that are here today, Ranulph, Stephen, Terry, Tim, Tony, Bill, Waziz, you guys are family and I love you and I'm grateful to you and I'm so excited that you're here today. Another day above ground. Another opportunity to engage the banks in head-to-head combat. It is an honor to be here with you and to spend this time with you today to reveal things that do not want to be revealed by people in high places, to show you things and dimensions of trading that were previously never discussed. And so it's an opportunity today for a new start for some of you to grow out of your smaller shells, to molt, to move away from things that just don't work, stuff that's not, it's just not working. It's time. It's time for you guys to realize that something is happening in the markets that institutions, bank, trading prop firms, whoever you want to point the finger at, those with the biggest amounts of money, are manipulating us. My job today is to show you a path. And along the way, there will be resistance. You will experience questions that will attempt to sway you from the factual information that you're seeing. You will have points in this webinar where in the very fiber of your material body, you will experience emotions, memories. You'll flash back to other webinars with less scrupulous individuals who took advantage of you, who will not have provided 1% of the proof that I'm about to provide you with. Today is a 100% non-manipulatable, factual, predictable event, meaning everything that's happening in the next hour, I have zero influence over as to its success or failure. I have constructed this demonstration in a way that eliminates the ability for me to manipulate you. Any manipulation that occurs from this point forward occurs in your mind, voices that you will be hearing. It's important for me to note this because many of you leave this webinar disappointed despite proof beyond argument, proof incontrovertible that stands directly against an entire industry of people that want this company to fail. People in charge of forums that charge money to be a part of that forum and give you indicators that don't work. People in charge of review sites that extort other educational companies on promise of bad reviews. Every person I've met is intimidated by what I'm about to show you because it threatens the business model of traditional trading education and tool vendors worldwide. They can't hook you for $30, $40, $50,000 over 10 years with this goalpost that always moves, this monitor that you can never see, these rules that always change, the system that gets updated and retrofitted and regurgitated once a year. I hear your stories. What you're about to see today is 10 years old. The method hasn't changed. The moving average hasn't changed. The methodology hasn't changed. What needs to change is internal to you today. If you're here today to be more successful, if you're here today to reverse direction. In my former life, when I believed such things, we would hear the word repent. Repent means to turn 180 degrees from its original language. And many of you today, I got an email today from somebody who said, Michael, I'm in a Top Step Trader combine. I'm down $1,500. I need help. It's time to repent. I can show you a path. It's a red pill, blue pill moment, though. You have to want it. Now, what does this path entail? I'm going to make it very simple for you. We are the only company in any of the platforms for futures or forex or equities that gives you the times and directions in advance. Side note, when you own the tool, when you learn the method, everything is on your computer. You're not tied to us in any way, shape, or form. It's local to you. But for the purposes of this demonstration, I will show you how we gave 70,000+ people this week access to 2 days worth of signals and times for the most popular futures and forex markets available. We are the only company who gave you a trading system with 2 signals, 2 setups, Geico setups, so simple even a caveman could understand it. And then comes back 2 days later and says, let's see what happened at those times. We are the only company that can do this because we're basing our methodology on a centuries-old technique that dates all the way back to WD Gann. In the age of pencils and papers and stock tickers and men with funny hats, people with cigars, captains of industry and railroads and manifest destiny, that methodology still works today. What is the method that we're referring to? It all goes back to this guy. William Delbert Gann from Lufkin, Texas, speaks to us. One of the most celebrated and controversial men in trading to this day. If you say, have you ever heard of Gann? You've heard of him 90% of the time. You may not understand what he did, but you've heard of him. How many of you want to be remembered 120 years after your death? What kind of impact did you have? If over 100 years from now, people look back at your work and say, man, there's still something to this. And our entire focus, the reason you're going to change today is because of this one word. Your future will be altered completely. Earl, that's cool, man. You take care of that crew. I love that crew. I love that girl. She's like a daughter, man. Earl, thank you. It's so good to see you here, man. I love seeing your face pop up. You light up my whole room when I see you. The most important word that you're going to remember today, the word that carries forward into time, is time. Everything we do is based on time. And Gann says this: time is the most important factor. What isn't? Volume spread analysis, order flow analysis, floor trader pivots, Renko bars, range bars, whatchamajigger bars, non-lag, zero, juric, blah, blah, blah. None of that stuff is the most important factor. And most of you were obsessed with it. Michael, does this work on my fancy bar that I bought 9 years ago that nobody uses, but I can't admit to myself it's junk? No. Stop it. Time is the most important factor. How does it work? If you study the past records, you will be able to prove for yourself that history does repeat. Listen to it again. I want you to tap your head as I imbue this knowledge past your cranium. Just tap your head so it gets in. If you study the past records, you will be able to prove that history repeats. And by knowing the past, you can tell the future. Done. Done. That's it. No mas. Done. That's all you need. All you need. The Beatles were wrong. It wasn't love. It's time. All you need is love. That's a lot of drawing. That's like a Jackson Pollock painting on my screen right now. So I'm going to ask you a question. I thought today, how do I get inside people's brains? Here's the first question. Is it easier or harder to trade a system if the times the signals are going to appear in advance? Question for the crew. Is it easier or harder to trade a system if you know the times the signals are going to appear in advance? David, I need you to calm down for just a second. I know you're excited. Easier? By easier, I mean emotionally, psychologically, or harder. Is there anyone here who would say harder will make it easier? That kind of didn't make sense. Is there anyone here who says, Michael, if I know the signals in advance, I'm gonna have a heart attack. It's gonna increase my stress levels. My adrenaline will go through the roof. Nobody here would say harder. It's easier. It's clearly easier. Now, is it harder or easier if we know how long we're going to let a winner run in advance? How many minutes or seconds, or in the case of larger trades, days? Is it easier or harder to know when we place the trade, we will be in the trade 5 minutes, 17 minutes, 4.5 days? Is there anyone who would say harder? Again, the answer is easier. But what we're talking about here is the difference between lagging and leading. If you want to open a company that sells indicators, if you want to open a company that has a trade room, If you want to make money as a vendor, this is the one you want. If you are a trading room person, you don't want people to know in advance. You don't want them to know how long to stay in a trade. You don't want them to know. What do you want them to know? How many of you went down that road? Some guy with a British accent or a Russian accent, or says that his great-grandfather's uncle was a pit trader and he shared his secrets with him, and some golden plates spoke to him in the middle of the night, and he's got a system, and he's got 5 levels of rooms: the copper room, the silver room, the platinum room, the gold room, the titanium room. Leading in every measurable metric is easier. Now, I'm going to ask you a question. I'm going to show you something. What if I told you there's a system that produced this with one contract in one day from 9 a.m. to 4 p.m. Eastern? Would you trade this system? What if I told you this system, you knew the signals in advance, you knew the times in advance, you knew exactly how long you could stay in the trade before you had to close it? Would you trade it? Okay. What if I said this was the system after 2 days? And one of those days was the FOMC report with one contract. We know the rules in advance. We know the times in advance. We know how long to stay in the trade. When that order is taken and it's filled and it starts to go in our direction, we have a thing that says you don't do anything for X number of seconds, minutes, days. Is there anyone here who says, no, I wouldn't do that? It's not mysterious enough for me. It's not magical enough for me. You don't have a British accent or a Russian accent. You don't have 9 trading rooms that I can join and spend $30, $40, $50,000 chasing an invisible fart dream that never works. You mean you're going to give me all the rules up front? Well, how is that going to help me? What am I going to do at 2 in the morning when I used to feel ashamed of myself and eat ice cream when my wife wasn't looking? Well, how do we get to this point? Everything ties back to leading. Everything ties back to easier. And everything ties back to time. Now, what about this makes it so hard for people to understand? Why is this hard? If we go back to the source, in 1909, on page 54 of the Ticker and Investment Digest, Gann is interviewed by none other than Richard Wyckoff. Many believe Wyckoff was the founder, the father of volume spread analysis. Here's why. Here's why 90% of you are going to reject this today. You ready? It's going to sting. I'm going to put the quote right here. And we're going to come back at the end of the webinar and review this quote. This is me talking to you today. I submit this to you today in full recognition of the fact that in Wall Street, let's say trading, A man with a new idea. In case you're wondering, that's me. An idea which violates the traditions of the trading industry and encourages a scientific view of what? Of trading. Is not usually welcomed by the majority of who? Of traders. For the reason that he, Michael, stimulates thought and research. These activities, thinking and researching, the said majority abhors. Most traders really, really hate. Oh, Matt, we're going to get there. And statistically, there's a 9 out of 10 chance you won't believe it when I'm finished. So hang on. Here's the quote from 1909. I submit everything I'm about to show you to you in the fact that in trading, a guy with a new idea, which doesn't go along with the usual crap, is not usually welcomed by most traders for the reason that I make you think and do research. Thinking and researching is hard, and most people hate it. Hundreds of years ago, not hundreds, 100, this guy had it figured out without a computer. And so for 100 years, people read his books and his papers and his notes, and they're like, I don't understand what he's saying. I feel like I'm just on the precipice of something important. There's squares and fans. Then we had a computer. Do stuff. How many of you have a computer and you use it to do stuff? Anybody? How many of you know your computer can do impossibly difficult things? Impossibly difficult things. And yet, most of us, before we used our software, before we had the code, most of us used indicators that used virtually no computing power. None. And along came me. 2 days ago, Wednesday morning at 7 a.m. to be precise, I sent out a link to a web page. I did. I sent it out. And the link to the web page, Matt, it had a map. It had a time map. One for every one of these markets for Wednesday, and one for every one of these markets for Thursday. Okay, with me so far? Matt, I also included a link to a video that described exactly how we would trade the signals in this time map. So it's important for us to stop here and review what I just said. So on Wednesday, because I was tired, I've been working out really hard. The trainer has me on this thing now where I have 2 500-calorie days a week. I'm also using intermittent fasting to help break through a weight loss plateau. And so Wednesday was my 500-calorie day. And I was tired. But on Wednesday at 7 o'clock, I can show you the publication data on the back end of our server, where you see the links published. You got the email from me that day. I gave, number one, a trading system with the stops and targets, and 2, the times and directions, Matt, for these markets for Wednesday and Thursday. So long at XX o'clock, short potentially at XX o'clock. And then all day Wednesday went by and all day Thursday went by. And Matt, you are here. Does that make sense so far? Anybody lost? Raise your hand if you're lost. Okay. What is the map? How does the map work? Our software does something over the course of 12,000 lines of code. It is probably the most powerful tool built for retail traders that you can purchase. I'm gonna hesitate a guess and say it's one of the most powerful tools. We consistently push the edges of the platform that we work on. We are on the phone with NinjaTrader more than any other vendor to ask, can we do this? Can we do that? We're trying to do this, but it won't work. Is there something you can activate where it will work? 12,000 lines of code. What does that code do? Well, remember what Gann said we needed to do. He said if we wanted to know the future, Matt, what did we have to study? If we wanted to know the future, we had to study time, specifically what time? Time when? In the past. And if we studied those times, we would be able to prove to ourselves that history does repeat and that by knowing the past, we can tell the future. So if we want to know what's going to happen on Wednesday and Thursday, we have to tell the computer to go looking somewhere. We have to say, hey, I want to know what's going to happen today. So the computer, we then turn it loose, Matt, on thousands of historical bars of data. And we put a limit to it. We tell it how far back it can go. We give it a certain amount of time to search for patterns in the past. And at the end of that, 12,000 lines of code, ding, ding, ding. At the end of 12,000 lines of code, Matt, it produces a map. And the map tells us what times banks, institutions, thieves, crooks, and liars, stop runners, lawbreakers. Joe, stay with me. That's one of those things where your head is going, I gotta stop making too much sense. I'm not always improving the software. There are updates, but Joe, they're mostly cosmetic. The core is solid. It's been the same core forever. So if we want to make it, I want to draw a line here instead of a dot. That's a typical upgrade for us. And those updates are included for life for free. No one should ever be penalized for when they purchase. So Joe, do you understand the concept of a time map? It's coming back and saying, hey, this is what I think is going to happen on Wednesday based on thousands of lines of history, boiling it down, Matt, to this chart. Oh. Understood? So for Thursday, the E-mini NASDAQ, when you ask people, what is the craziest market? Which one are you most afraid of? There's a name for it. The NASCrack. You have to be on crack to trade it. It's too volatile. It's impossible. Angels and wise men fear to tread. One of the maps the software gave us for Wednesday and Thursday was a 1-minute chart on the NASDAQ. What does the map look like? Oh, looks like this. Now, before you freak out, I want to hold your virtual hand. If you're a guy, it's like a dad and a son right now. It's nothing more. If you're a girl, father, daughter, sitting on a park bench, maybe grandfather. How about that? Not sure that was the right example, but we're going to go with it. I want you to listen. There's a lot of signals on this chart. I'm not saying you need to have all these signals. I'm not saying you should trade the NASDAQ on a 1-minute chart. You can trade the euro dollar on a 15-minute, a 4-hour, and a daily chart with this software. I knew that Tesla was going to go up. Did you? Pretty good idea. Earnings reports, this is the most important one. It's probably not going to meet traders' expectations. Oh my God, it's just still going up. Yeah, we knew about it a week in advance. But that doesn't sell, I was going to say newspapers. They don't sell newspapers anymore. That doesn't get clicks. This is the NASDAQ on a 1-minute chart on a very sensitive setting of the software. Those of you who have the software, this is an 8 on the swing strength. It's not huge. But Matt, every one of these times was the answer to a question. Andrea, you did it wrong. Did you watch the video? Did you look at the rules? I'm going to walk you through it. 1013, 1034. Hang on tight. All of these times are selling pressure times. Clearly, I did not. Don't feel bad. It's a process. You didn't lose any money. You didn't lose any blood. You are the same. You are whole. You are learning. We learn from making mistakes. Can I get an amen? Why do we fall down, Mr. Wayne? So we can learn to pick ourselves back up. There is no shame in making mistakes. We make them quickly. We are fast to failure. We learn, we develop, we test, we move on. Now, every one of these signals, Matt, was the computer's way of telling us when we get to these times, historically, the banks have an undeniable proclusivity for selling. This is something the human mind is really incapable of calculating in real time. Did you know that? We have a blind spot. How many of you do the same things over and over again, even though some of those things are really bad habits? For the better part of, gosh, almost 20 years, Andrea, I had a very unhealthy relationship with food. And once every 18 months, I would find myself doing one of two things. You ready for this? At one point, and I would always do it in a sneaky way. I didn't want anyone in the kitchen when I was doing it. I remember how it felt. Ron, I would take a bowl of Frosted Flakes. Oh yeah. With a bunch of milk. And I would take one or more chocolate donuts. Reg, you know the kind that has the hard chocolatey shell? It's not soft. It's got that kind of, you bite it and it snaps a little bit, breaks away. And I would crumble that up, Andrea, in the Frosted Flakes when the flakes were still nice and crunchy. And I would just devour that thing in like a minute. I called it donut soup. Or I would take a piece of bread a roll, and I would cut wedges and wedges of butter. And I would pile them onto these, especially like a poppy seed roll. Oh, same thing, nobody looking. And those were the moments, Andrea, that I knew I had been here before. I'd been standing in this kitchen a year or two before doing the same thing, promising to myself I will never do this again. The low point, right? I'm doing good. I'm doing really good. But it's hard admitting that problem. The software is telling us these are the times you're going to make mistakes on Thursday. These are the times you're going to make mistakes on Thursday. These are the times, Matt, that banks are going to make the markets look like the opposite of what the software is warning us about. All of these times are going to look like awesome buying opportunities. And all of these times are going to look like awesome selling opportunities. Fact, banks get caught all the time manipulating markets. Traders in futures and forex and stocks manipulate price to present a psychological trigger. I won't ask for anyone to raise their hands. I will tell you, there was a day where I said, I'm just going to do the opposite of everything. I'll pay somebody to sit here and I'm going to place a sim trade. And when they see me go long, I want them to go short. When they see me sell, I'm going to pay them to hit the button. Because surely, if the exact opposite of what I did made money, that's the solution. Don't say you've been there or not. It's embarrassing. I know that it's embarrassing. I'm not here to make anyone feel bad. But what this software is telling you is over those 12,000 lines of code across thousands of historical bars of data, these are where the landmines are most likely to be buried tomorrow, Thursday, Friday, Monday of next week. Do you know what a landmine is? Some of you are old enough to remember them. Some of you are old enough to have probably dug a few. Thank you for your service. This is a landmine. When you step on it, boom. And so there are fields filled with these things. It's one of the biggest crises in the world today. Did you know that? When the wars are over, nobody goes back and says, hey, sorry, we put like 30,000 landmines over there. Here's a map. Just dig them up. It takes years of people walking through looking for these things and finding them and diffusing them. The software is saying these are the times where landmines are likely to occur. Matt, so far so good? Hey, Melissa. What's up? How you doing? How you doing? Melissa, fun fact. When I work out at the gym, ladies who are 65 years or older come up and talk to me. One lady made a very inappropriate face the other day. Matt, calm down. Here we go. This is the best thing you're ever going to see. You don't have anywhere to be that's more important unless you're donating or receiving an organ. Slow down. Okay? It's like an orchestra. We speed up, we slow down. There's a crescendo at the end. You're going to throw roses at me. I'm going to say, no, it's okay. No, really. All right, so that first process is in place. Second process, I'm going to leave that chart up in the background because we're going to come back to it. I gave you a video, 2 setups. 1, signal with trend. That one has a small subsection called a crossover. The other one is called a puncture trade. Andrea, these were the only 2 things you needed to know. 2 setups. There's a video. I'm going to show you the video. Remember, I told you the entire webinar is transparent. There's nothing I can do to make it any different. It's already done. Here's the video. I'm going to paste the link back to you again. It was in your email. Here it is again in the chat box of your GoToWebinar Kumasiyama. And in here, I go over what we're going to do when we get to these times. To show you how old the video is, you're going to see in the upper left-hand corner, NQ0318. Matt, the video is a year old. Joe, haven't changed the method in over a year at least, right? Now, we're going to use a 120 period exponential moving average. Is this the only way to evaluate trend? No, but it's the one we've used for almost 11 years. And so we're going to keep using it, because if you change it over time, people will accuse you as a vendor of curve fitting. So we remove curve fitting from the argument by not changing things. Number 2, when the moving average is going up, chugga 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 chugga, and we arrive at a buying pressure time on the close of that candle. Let's assume it's a down close candle. Matt, we're going to enter on the close of that 1 minute candle if it's a 1 minute chart. So I'm going to come over here and type the letter E. There's a distance from the low of that candle to a marker on my chart. It's not a fixed distance, but in the video I talk about, and each week I mention, on a 1 minute chart, it's 10 ticks for every mother market, but the NQ, for the NQ, it's 15 ticks. On a 3 to a 5 minute chart, it's a 15 tick drop off. Okay, so that's carved in stone before we get here. Now, at the close of that candle, stay with me, it gets super complicated here, not really. Down in your histogram, there's an opposite selling pressure signal. So Matt, over here somewhere is a selling pressure bar. One of 2 things is going to happen. We're going to hold the trade until we get to the opposite signal. And then we're going to exit. What is the premise of this, Matt? The premise is the computer found a window of time. Everything that has a beginning, Neo, has an end. The computer found a window of time where pivots have occurred over the 12,000 lines and thousands of lines of code. And it's saying, hey, let's see if they do it again. Let's see if they do it again. And so, Matt, we take our little boat and we put it in the water and we see if we'll get swept out to sea with all the other institutional orders. Okay? Everybody understand that setup so far? Now, there's a variation of that called the crossover. If we're above the moving average, and Andrea, there's a selling pressure signal. And Matt, it starts to do this. When it closes underneath the moving average, we're going to enter in the direction of the original signal right here. Enter. Our stop is going to be one tick above the crossover candle. And then Matt, same procedure applies. We're going to hold this trade until the next opposite time. So earlier today, I asked, would it be harder or easier if we knew how long to be in a trade in advance? The premise, and every fiber of your body right now is saying this can't be true, it can't be real. We already know the results. We already know the results. And yet, right now, at this very moment, you're going, oh, no. That's the signal with trend or the crossover. What's a puncture trade? If we arrive at a counter trend signal, the market is moving up, let's say, and we have that stop level. One tick above that line is our normal stop. One tick above, one tick below. I hate when it touches a line and keeps going. Touches, no bueno for me. What we find frequently happening, Matt, near the counter trend times. Let's say we have a high close candle right here, counter trend selling time. What frequently happens is banks will run up and run back down. So Matt, they'll make it appear like a breakout trade. They'll make it appear like the market's going even higher, and they'll come back down and settle near the lows. Have you guys seen these? They refer to them sometimes as pin candles. Pin candles. And the same thing occurs down below. If we have a buying pressure signal right here, and then Matt, we have the stop line right here, 15 ticks away from the low. What will happen is, Matt, they'll kind of plunge down underneath that line, and they promote the appearance of additional selling. You with me so far? And so what we do is we exploit this by looking for a 6 to 8 tick on the lower time frames. It's higher on the bigger time frames. We look for a 6 to 8 tick thrust, push through that area, because we know what the behavior is. This is when they suck in all of the dumb money, and then Matt, they drop it like a hot rock. This is when they suck in all the dumb money, and then Andrea, the very next bar goes up 1,000 million ticks, and you're sitting there going, why? Stop, reverse, stop, reverse. So Matt, the puncture trade is aligned with what historically happens in trading when banks manipulate markets. They create the appearance of longs when they're looking for liquidity for shorts. They're creating the appearance of shorts, but building liquidity for longs. Joe, tell me if that makes sense or not. And so what we do is we put an order to purchase right here. We leave it sitting on the line. And I have an exit right here. The stop goes one tick under the candle that punctured the line. When they come up and they jab it, they're like, all right, here we go. We're going to get these suckers. You ready, Johnson? I'm ready, Thurston. Let's go. All right, push it up and pull away the volume. Woohoo! Look at all the buyers. Nice. Keep selling into it. Let's push it up again. Woohoo! This is like taking candy from a baby. Oh. And so we're looking for a puncture. It's a scalp. It's a breakout scalp. That's all it is. So Matt, ready? The system was given out in advance. What else was given out in advance? The times were given out in advance. Now, I want you to notice where I'm going to put my cursor. Can you see here where it says 1:40, 1:10, and 2 o'clock? These three little nodes right there. 1:40, 1:10, 2 o'clock. Okay, now I'm going to pull the chart over. And before I go any deeper, I want you to see 1:40, 1:10, and 2 o'clock. Does everyone concede that the times I published match a day and a half, 2 days later? Okay. So at this point, before I go any further, before we look at any of the signals, I want you to understand. I have a penchant to be theatrical. I understand that. I know that a lot of you are wanting me to push forward. But here's the deal. After 10 years of showing this exact same thing, John, 90% of people don't purchase. And I don't know why. Because I gave the times in advance. I gave the rules in advance. And we see the results afterwards with zero manipulation. No cherry picking, no curve fitting, no signals disappearing, reappearing. And here's the deal. 90% of people walk away sad, angry, mad, fill in the blank. And I don't know why. No clue. So, Andrea, when we apply a 120 period moving average to this chart, and I'm not going to go through every signal, I'm going to go through a few of them. At 9:30 this morning, the 120 period moving average is the white and blue line. When it's going up, it's white. When it's going blue, it's down. Up white, blue down. At 9:31, Andrea, it closes above the moving average. At 9:31, we go into 932, and Andrea, it punches through the blue line. That's setup number 2, a puncture trade. How much are we looking for? 6 to 8 ticks. There are some people, Matt, who use this as a long entry, like a breakout. They trade it like a breakout, and they hold it long in the direction of the trend. It's a failure of the signal. We're looking for the stop run. Matt, can you see that little wick that's there? That's what I exploit. I look for them to kind of grab. There's a hesitancy right here, right, Matt? They're like, no, and then, the heck with it. Okay, 936 is the first example of what? Signal with trend. The first one is a puncture. Yeah, David. David writes, that's what you call it, a penchant for being theatrical. Sure. David, my wife comes in the office and she sees me talking to people that don't exist every day. Every day of my life. My life is a giant simulation. So I've learned to, what's the word? Entertain myself. At 9:36, Andrea, the close of the candle is right here. I count down. I use an indicator in your indicator list, and if you're a customer, I highly recommend you apply the bar timer indicator. It will tell you how many seconds are left before the bar closes. I have my finger on the buy button. The mouse button is pushed down all the way, and I count down like Elon Musk in Florida. 3, 2, 1. Release. Order filled. In a slow-moving market like the ES, I'll drop a limit order right on top of the candle, and you're always filled. Bar timer. Use it. This is today. This is today, Ron. Andrea, we're long from where? 93.75. Until when? Matt. From 9:36 to 9:46. Knowing how long to be in a trade is easier. Everything in trading needs to be easier. Make it easier. 9:53, Andrea, we're going long. Where? Close of the candle, 91.02. Where's my stop? 1 tick underneath that white line. I lose $7. Womp womp. For the record, I want you guys to notice what happened at the 9:46 counter trend signal, David. Matt, what happened at the 10:13 counter trend signal? I can't trade them with a trend trading model. I'm looking for breakouts, but just for the record, what did the software tell us 2 days prior was likely to happen at 9:46 and 10:13 and 9:36? Let's continue. I can't go short at 9:46, but it made money. I can't go short at 10:13, but it made money. At 10:23, Matt, do you see this little limp-wristed, half-hearted attempt to try to reverse and go up? It looks like a ladle. What do they call that? A cup pattern? I can't draw it right. You know what I'm talking about, right? You can see it. Okay, they try. We get tagged, Andrea. It stops us out. Rules are rules. No cherry picking. No I would have done this, I would have done that. If you were in my platinum, titanium, palladium room, we would have stayed in that trade. Stop hit. Cup and handle. Thank you. So we're done. Andrea. There was a famous saying in evangelical churches. It's Friday, but Sunday's coming. Judas just gave up Jesus. It's Friday, but Sunday's coming. And I remember sitting there when I used to go, be like, ah, that's a good story. It's 10:23, but 10:34 is coming. 10:34, I know exactly what to do. David says, mine is, thanks God it's Friday. So here, more of the same. We get to 10:34. The close of the candle is the entry. Close of the candle, Andrea, is 90.7275. You can see if you put a limit order there, it would have been filled. Our stop, Matt, is one tick above the line, which is a set distance away from the candle. We hold it now until when? 10:34 until 10:52. There is a order to the markets that are seemingly what? Chaotic. And I know how long to stay in it. Now, am I saying you need to trade trend signals? Am I saying you need to abandon what you're doing? No. Other people pair this with their existing software and methods. They pair this with their support and resistance levels. They pair this with their divergence. They pair it with their order flow deltas. I've seen it all. This is, though, Matt, the simplest way I know how to package it in a way that everyone can understand it. I have to make it dumb simple. Now, when there's a 10:52 signal and the moving average is down, Andrea, what do I do when I get to the white line? Is it a signal with trend or is it a puncture trade? No. What color is the moving average? Say it out loud. What color is the moving average at 10:52? We're going to get there. Blue. But the dot is white. When the dot is white, what do I do? I'm waiting for a failure. I'm waiting for a breakdown. I'm waiting for a stop run. And I'm going to get in there and I'm going to put my little greedy hands out and take 8 ticks from that market. Thank you, sir. May I have another? And I take my 8 ticks and I log it. Done. I can use an ATM, Matt, to automatically catch the 8 ticks. I slide my stop right over the top of this candle right here. I'm going to blow it up so you can see it. Burn this into your corneas. Those of you that don't have glaucoma. Just trying to be sensitive. The sell order is sitting on this line, Andrea. My stop is 1 tick above. My target is 8 ticks underneath. You want to go for longer? Yeah. Matt, you see the double bottom that kicks in right at that time with the stop run the second time? What are they doing in this time period? Faking everyone out. Building liquidity. $11.07 comes. Matt, they try to push it down. Accumulation phase. Very good. They try to push it down. Matt, it comes up 11.07. It drops 44.50, 43.50, 42.50, 41.50, 40.50, 39.50, all the way down to almost 36.50. From where? 44.50. It moves $160 straight down, but it hits our stop. At the end of this day, starting at the open and ending at 4 o'clock, Andrea, I'll walk you through the last few trades of the day. Ready? We saw the beginning. Now let's look at the end. 3:17 Eastern. Why am I yelling? I'm so sorry that I'm yelling. I get excited about this. I think, Melissa, sometimes I think if I say it louder, people will do it. People will be, I can save more people if it happens. And it never works. The close of the candle. Andrea, moving average is white. Signal is white. Make it any color you want. I don't care. Close of the candle is at 95.5. Stop goes one tick under the line, which is a fixed distance. Matt, how long do I hold this? Joe, how long do I hold it? Bruce? Until 3:34. Knowing how long to place the trade and how long you have to get out is easier. It's easier. Andrea, blue dot, white line, signal with trend or breakout puncture? Puncture, puncture. That's right. I'm going for 6 to 8 ticks easily. Where's my stop? Underneath this line. Matt, what am I hoping they'll do? More of this crap. More. I want to be in that when they do it again. So I grab my crumbs and I move on. Those crumbs add up, as you'll see here in a second. 3:43, I have until 4 o'clock. Matt, how long? 17 minutes. Knowing the times and how long, easier or harder than not knowing. Is this the candle? Is this, wait, ooh, that one moved quick. Ooh, oh, okay. Oh, I don't like the look of that one. 4 o'clock, I'm out. Done. Andrea, if I wanted to trade past 4 o'clock, what do I do with this blue dot? Melissa, am I going long or short? Puncture. If it goes through here, Matt, I'm in. If it goes through here, I'm in. Where's my stop? Just under the puncture candle. And Matt, how long would I hold it if I wanted to get in and hold it? If I want to use it as a trend entry and just ride that bull all 8 seconds. That's right. I hold it until 4:28. There you go. And now, if I add up all of those trades and I go back on FOMC day and I add up all of those trades from the open till 4 o'clock, at the end of 2 days, I have this. All the blue signals, day 1, FOMC day. At the end of FOMC day, Andrea, I'm up $1,000 per contract, hypothetical. At the end of 2 days, I'm up $3,035 from 9 a.m., 9:30 Eastern, from the US Open until 4 o'clock. Here's the part that kills people. This is the thing other vendors don't want you to hear. This is the thing review sites don't like for you to know. all the times were known in advance. For this particular model, I knew all the dates 7 days in advance. Right now, Matt, you can have 6,200 customers have the times for tomorrow, Monday, Tuesday, Wednesday, and Thursday of next week. What do I mean by that? Let me show you. We look at the YM over here, right? Matt, can you see that chart okay? On the right-hand side of my chart, there's a dotted white line. This is what you see when you own the software. Yes, Reg. Today in the trade room, we were up $600 in the NQ, $500 in the ES, and down $200 in CL. We hit our $200 room goal within 10 minutes of the open. So after two trades in the NQ and the ES, we had a puncture trade and a signal with trend on the NQ, and we hit our room goal of $100 to $200 per day per contract. And the signals went on to make 600 in the NQ, 500 in the ES, and -2 in CL. I have the recording if you want to go back and watch it. Here, let me see. The recording is right here. Oh yeah, no, I want to help. There's not a lot of talking. But there, you got it. So Matt, all of these times are here for the future. So can you see, brother, how I have them all ready for tomorrow? Yes, for customers, I have a training room where we show these exits and entries live with a simulated contract. We guide people through. And Matt, I use a $100 to $200 per day daily goal per contract. That's cool. But Matt, do you see how I have the times for tomorrow already sitting there? I have them for Friday. I have them for Monday. You can have them for Tuesday. You can have them for Wednesday. You can have them for Thursday. Up to now. They're available right now. These times, by the way, do not change, do not update, do not disappear, do not reappear or move, ever. Hey, Jerry. So if you wanted to go out 1 week on your charts, let me show you. So Jerry, normally a histogram appears with the dotted line right here. NinjaTrader has a weird quirk. These programs aren't built for predictive indicators. So Jerry, if you want to have the times in advance out to a week, here's what you do. You're going to pull the histogram up all the way to the top of the chart like this. You with me? Cover up your price bars. Now, you go into the indicator, and where it says time warp panel, you're going to see a parameter for timeline that says shift timeline forward. And you see that little thing that pops up? shift the timeline forward 7 days. When I click it, watch. You see how the dotted line disappears? That was here, Jerry. Now I'm going to go back 7 days to find it. There it is. So Jerry, this is now, right now. We stuff the future data in the past. We have to put it in a post office box that already exists. So now, Jerry, look, you see all those times? This is through Thursday of next week. So you have to create a histogram chart by itself and then shift the timeline forward with that one parameter. And now you have all the times for Friday, Monday, Wednesday, Thursday, all that fun stuff. Does that make sense, brother? Yeah. Okay, sweet. This was the euro US dollar, by the way, if you're a forex trader. With all your experience in this methodology, what is your favorite time frame? Very common question. So Matt, this was the NQ on a 1 minute chart, right? The YM on a 3 minute chart. The reason I show it on a low time frame is because I get a lot of signals to put in people's face, right? I get a lot of signals to put in people's face. So if I look at CL on a 1 minute chart, Matt, there's more statistical relevance, right? Because I had a lot of signals to work with. People are like, oh, 943 worked, 953 worked, 959 worked, 1004 worked, 1011 worked, 1021, 1032, 1044. Oh, that's a lot of signals. This software is really good. However, we can go out, new chart GC0220. We're going to go out to a weekly chart. I'm going to load no indicators. So Matt, this is a weekly chart, right? My preference is a low time frame because I have, as you've no doubt figured out, an element of ADHD, and it's hard for me to be in something a long time. Easy, easy. Letting it pass. Okay, we're good. But the system, the methodology, applies equally proficiently across all time frames. No, ZB does not move too slowly. Jerry, there's a crazy lady in here named Melissa who trades the bonds with this software. She's out of her mind. If you look at her, it looks like she's not moving, like she's frozen, but she's actually moving millimeters every minute. You can trade bonds with the software. So I'm going to load a template for gold. What was his name? Mohammed. We built this from Mohammed the other day. MOH, GC 60, GC daily, GC weekly. So Matt, I built these charts for a new customer the other day. I'm going to hit load and my processor is going to lose its mind. Okay, so you see that chart? Muchacho? Same system. Signals with trend, breakouts, punctures. The last signal with trend in gold was Friday, December 20th. Matt, the exit is Sunday, February 9th. We're presently $102.50 up from that point. The prior signal on August 2nd was done on September 13th. That one was $42. I don't know what 8 to 10 ticks equivalent is here, but Matt, maybe it's $8 to $10. I don't know. There's $8 on a weekly chart. And then the prior signal, Friday on the 7th of June, has us out by the 12th. That's a $65 move. And then Matt, just honestly, there's a stop out right there. $34. 140, 150, 210, 180. I love the smaller time frames. I adore the smaller time frames. So in my room, when I'm teaching new customers, I'm looking at the NQ 1 minute. I'm looking at the ES 1 minute. And right now we're having really good success with a 3-minute crude chart. I have one I actually, on my personal, in my personal workspace, I have a 9-second and a 21-second NQ chart. That's the lowest time frame. This works on tick bars, Renko bars, range bars, volume bars, tick, range, Renko, volume. I think that's the majority of the ones most people use. So Joe, it works on all of those, yes. There are customers that are on the lower time frames. Then there are customers that are trading options on SPY, QQQ, Tesla, Amazon, Google, Apple, and NFLX, Netflix. They're using it on futures, forex, crypto as well. When you have a data feed for crypto on Ninja, you can do that. So there's no limitation, but David, it's the same methodology. I already know the signals coming up in the future. There's already a map right here. Yeah, I pulled up an FX pair a minute ago. I had the euro up. So Matt, these were the signals on the euro today. No, today is over here. But Matt, if I covered up the upper corner of the chart, could we say that was the same as the NQ 1 minute chart in terms of accuracy? Dave, because some people trade forex instead of the currency futures. Okay. And so we can go, we can take this out all the way to a daily chart on the pound dollar. How much data do we have loaded? Yeah, we'll load 10 years of the data. And there should be a template on here for the pound warp daily GBP USD. Yeah. Man, that range really tightened up. Let's do signal dots only so you don't have to learn about the patterns right now. Hey, John. Let's come in here. The dot offset's too close. That's going to be better. I can't use a 60-minute dot offset, Dave, on a daily chart. So Matt, on a daily time frame, we were looking for an up move on the 2nd of December, an up move on the 21st of December, an up move for a few days just before Christmas, an up move on the 30th, then another up move on the 9th of January. You'll see that, Dave, they came down and pulled in liquidity here. So Dave, when you see white lines being punctured and the blue lines are being preserved, Matt, what that tells me right here, if I put a vertical line right there, here's an advanced concept. I didn't mean to go that deep. It's a possible trend reversal warning. So what I'll do, and this works on all time frames, everybody, what I'll do is I'll put a line right there, and it tells me to pay attention to the very next signal. Okay, Dave, see if you can follow this logic. If they break the stop level here, and they pull down into it for liquidity, Matt, it's telling me that the buyers who voraciously, historically, I've expected them to do what? To do this instead, right? To push up. This was the expectation, right? Instead, they kind of lagged and drifted and messed around down here. It's an early warning sign that maybe I should go short or sell the pound on the 24th. And that there's a good possibility we'll be down below the moving average soon. But either way, I have the times on the daily chart all the way out into the future. And so if we go back into the past, when the pound was falling, you see how it looks a lot like today? It's the same methodology, everybody. Short right here, stop above this candle, exit there. Matt, puncture right here. Short here, stop out. Short here, little bit of money, stop out. No puncture, short here, profit. Short here, profit, puncture. Short here, stop out, puncture. Short, exit. Short, small loss. Short, almost hits the stop, target. Same methodology. It's all the same stuff. But only 10% of you are sitting here thinking, yeah, this is what I need. I always thought this was going on. If you spend 10 minutes online and you Google forex market rigging, there are a plethora of articles. There's a never. Friday brought the news that some of the world's biggest banks have been fined $1.2 billion for rigging forex markets. Matt, does that look like a rigged market or somebody who had a plan? That's somebody with a plan. Okay, let's do another example. Futures markets rigging. Bloomberg. JP Morgan learned spoof method from Bear Stearns, US said. Use multiple fake orders to manipulate the prices of precious metal futures. The maneuver adopted by traders' new colleagues at JP Morgan became part of a spoofing and rigging campaign so expansive that federal authorities have now linked it to a criminal enterprise operating inside the bank's, the US's biggest bank. All I know is this chart tracks these people. This software, this program tracks these people. And when the software says, hey, Michael, the trend is up at 248, and it's probably going to go up until 318, because the people who rip you off on a daily basis and don't care are usually pushing. I take 84 ticks or $400 out of the market with them. I look to take 8 ticks out of the market here at the puncture, where Matt, right on time, they stop and they diggle around for a while. And they're luring people into a reaccumulation phase, selling into it as hard as they can, taking profit. And then at 342, 2 days after I told 80,000, 70,000 people what was going to happen. Andrea, white moving average. What do we do at 342? Signal with trend or puncture? Signal with trend. And when JP Morgan rigs the market again, I do it with them for 66 ticks or $300 more, $700 in a half an hour. And here's the sad truth. 95% of traders went short right here. 95% of traders went short right there because they do the opposite of what the banks want them to do, or they do the opposite of what the banks are about to do. Landmines. Did you hear that? I asked you in the beginning, if you knew what the rule, if you knew what the system outcome was going to be, would you trade it? Everyone here said yes. You can trade it on a daily time frame. You could trade it on a 15-minute time frame. You could trade it on bonds, wheat, corn, soybeans, soy meal, the Nikkei, Hang Seng, FTSE, the Bund, the DAX, Australian Stock Exchange, Canadian Stock Exchange, Saudi Arabian Stock Exchange, South African Stock Exchange. I have customers trading the weirdest stuff in the world. 2 setups. Trend up, buy dot, crossover, sell. Trend down, puncture. Trend up, puncture. How long do I stay in? Okay. What are you going to do with all your free time? Are some of the trades going to turn out to be losses? Yeah, that's part of trading. What we're providing is a statistical edge. No more, no less. If you've read the book, Trading in the Zone by Mark Douglas, the most important thing you'll remember from today is this. There is a random distribution between winners and losers for any given set of variables in trading. You never know which one's going to be a win or a loss, but you have an edge. This truth, having an edge, makes trading a probability game. When you believe trading is a probability game, concepts like right or wrong, win and lose no longer mean the same thing. As a result, your expectations will be in harmony with the possibilities. I'm not saying you're going to make 10 successful trades in a row tomorrow. I'm saying that when we looked at 50 of them over 2 days, one of the days being FOMC day, with signals known 24 hours, 36 hours, 48 hours in advance, we did this. We have an edge. We have an edge. But our edge is knowable in the future. Our edge has a system that is simple if you want it. If you have your own system, God bless you. I'm not going to tell you to change what you've been doing your whole life. Some of you are 50, 60, 70 years old. You got a down pat system. Use it. So here's what happens next. For the 10% of you that have seen this, disregarding my personality quirks and seeing the facts of what's happened here today, I'm going to show you how to get the software. You already know what the setup is. I've revealed all of my secrets to you. When you purchase, I'm going to personally set up your workspaces and templates. Carl says, hey, Michael, Carl Bell here. Good to see you. Loving the software. Wouldn't trade without it. Yeah, pretty common. And Carl, I think you're awesome. You know that when you come home and your dog looks at you with that face and his tail is wagging and he's looking at you like he couldn't love you anymore? That's how I feel about you right now. I think you're awesome. Thank you for sharing that with me. You made my day. You're the best part of my webinar. It's for real. I think you're awesome. I'm going to set up your software over the course of 2 hours. So we're going to meet one-on-one. I'm going to log on to your computer via GoToMeeting. I don't care what market you trade. I don't care what crazy bar type you use. I don't care. I've seen it all. 11 years. Companies don't stay in business 11 years that do this. They change their stuff every year. They close, they open a new name. 11 years, same stuff. I'm going to log on to it. If you're trading bonds, notes, ES, NQ, CL, all of the systems that I've shown here today are using one setup. I'm using the same settings in the indicators across all of the instruments.